This is how you work smarter and not harder in order to become a profitable trader. Once you learn these criteria that I'm going to teach you in today's video, you will learn that you can drastically boost your win rate, you will find bigger risk to reward trades, and you will be able to bank consistent profits. By the end of this video, you are going to learn my simple 4-hour trading time frame that I have backtested thousands of trades and reached about a 75% win rate running mechanical 2 risk to reward trades. And I've helped and taught countless other traders how to master the same model. And it's very simple to understand because it's a fully mechanical, repeatable, and systematic process that has a proven edge. I'm going to cover the rules and criteria of this simple model that has helped countless of my traders not only just get funded, but also maintain consistent payouts on their funded accounts. This video is going to explain each and every individual component of my trading strategy, being structure, supply, demand, and liquidity, all neatly packaged into a simple trading system that has a very effective and profitable edge. A quick promotion for the video, well, I don't actually make any money from this, but I've also created a free Discord community where you guys can get access to a much more in-depth course that will teach you this profitable model, and where you can also live stream trade with me. This Discord community is more of a documentary for my own purpose, to document my trades, to journal on Discord, and instead of creating an Excel spreadsheet for me to journal the trades by my own, instead I decided to create a Discord community where you can follow these trades with me in live time. With that being said, let's get into rule number 1. Criteria number 1. I've loaded up a 100k account on OddCAD from past market data all the way back to 2019. And I'm going to take you through each and every trade that prints the criteria on this quick trading session. I'm not going to do the full 5 years. I'll just do a couple, and then I'll go over my total results so far, my data that I've collected this on, how I have formed my edge with this particular model. So criteria number 1 is our structure story. Okay, quick and simple. As we taught in the Real Basics, price moves either with higher highs or lower lows. All right, but remember, price does not necessarily look like this. What price will do in a more realistic scenario is we will form that break of structure. After every break, we can anticipate that pullback, a new break, and then a break of structure to the downside, and then a break of structure to the upside. So what price will often do is it will use these strong lows as liquidity to form that next break of structure in a bullish scenario. So after this break, we'll most likely see some pullback, a break of structure, and then a break of structure to the downside. What? Creating a supply, beautiful strong high, trapping out sellers, creating a new strong low. Okay, and these strong lows created after a liquidity sweep of a previous strong low or high is a very powerful area in the market. As Photon Trading talks about liquidity, we have equal highs, lows, inducement, and strong low liquidity and strong high liquidity that created the break of structure to the downside. Now, I just mechanically use strong highs and lows. Okay, so I've created my own structure indicator on TradingView called Funded Structure that actually marks out the structure for you, which kind of makes it more rule-based and simplifies it for you. You are able to mark out your own structure as well if you do have experience in it, but very simple. Break of structure, pullback, new break, pullback, new break, sweep of the strong low, new break, pullback, continuation, bit of a range. Structure is just really your highs and lows, that what you can see with your naked eye. Okay, so what I'm looking for is our most recent strong high or low. This is not a strong low yet. Why? Because we haven't broken structure. I want to see in this trade plan a sweep and then a break of structure to the downside to look for shorts. Okay, so this purely happens on the 4-hour time frame. We don't refine, we don't hop onto lower time frames. Why? Because it's a very simple one time frame mechanical strategy that has a proven edge. And every time you want to change criteria, you need to rebacktest thousands of trades and let the data decide if it is a viable change or not. Okay, so there's our sweep, our break of structure. Let's just wait for our pullback, and we can hop into criteria number 2. Okay, well, let's continue from the beginning. Criteria 1, we have our most recent structure story. Break of structure, strong high, weak low. Okay, the next step after we've marked up our structure story, whether you're doing it yourself or with my indicator, we need to ask ourselves, did the high that created the break of structure to the downside sweep a previous strong high. Well, here we had a high that broke structure to the downside. What do? We swept it. So criteria 1, check. 2, check. We had a strong high sweep. Check, check. Criteria 3, check. That created the break of structure. The next part of our criteria is an order block. That created volume. Okay, if I mark out my order blocks, we have a supply zone here. That created an inefficient push, a volume. And we have another one over here that created another inefficient push. How do we know which one to choose? Well, that leads us to, we have our order block, criteria 4. Now, criteria number 6. Fib, from the high to the low. All you want is your 71 level, your 81 level, and your 0 and 1. Okay, the important factor to know about our order block is that the order block needs to be above the 71 level. If we have a supply zone that's below, that's invalid. So in this scenario, we have 2 above the 71. So I will always take the most recent. Your stop always mechanically goes on the 1. 1 to 2 risk to reward. Place order, for me, 2% risk. So I have a dynamic rule-based way of approaching risk. In terms of a challenge account, 100K. Okay, the first trade that I ever take is 2% risk. If I'm ever below 100K, 1% risk. That means I need to take 10 losses in a row to fail the 100K account, which I've never done before with this strategy, and I've never even come close to yet. The worst streak that I had account go down to 5% in drawdown, a max drawdown, and I brought that account all the way back to 4% up, which was quite a while back. So that was the worst scenario I've had. But besides that, this model is beautifully consistent once you start backtesting and forming your edge with it yourself. Okay, let's continue with this trade. So just again, all our criteria is in place. 1 through 6, I do have some A+ criteria as well. So here we have a fair value gap in the leg, which is number 8. Number 9, we swept strong high liquidity. The order block has created immediate volume. Both has in this instance. And we have quite a corrective pullback. So the pullback is creating nice liquidity, a lot of wicky, rangy price action, which is a good confluence for the trade. Okay, I'll put up a little picture on the screen to show you what I mean. Give me a sec. This is the types of pullbacks that I look for. I want to see either a sweeping or a corrective pullback. A pullback that creates equal lows or creates lower lows, or you could call trend line liquidity. The pullbacks I don't want to see is those heavy volume 1 or 2 candle bearish or bullish pullbacks, because there's often good probability we'll then shift and sweep that current strong high. Okay, so let's play this through. Okay, more liquidity building here. We can expect to sweep that into our limit. Okay, so there's the sweep. So from here, there's no break even, there's no partials, there's no trailing your stop loss. It's either going to be stopped out or a full TP trade. Okay, so we'll let this play through. Okay, there's TP on that first trade, so that's a 4% gain automatically. So now we can clear up our drawings and we restart. Okay, so let's continue with where we left off. We still have the same strong high and the weak low. So what we need to see is either a break of structure to the upside, a sweep of that strong low, and then a new break to look for longs, or a sweep of the high and then a break of structure to the downside, looking for shorts. So that will be the current trade plan, and whichever one prints we execute. Besides that, we're not looking for trades. We're not looking for anything else, as our current range is still quite large. So all of this is internal noise that we don't have to worry about. Okay, all of these highs and lows here, here, we don't worry about. We know that our current range is this high up here, because that's the most recent high that created the break. This is all just a pullback and a current range. Okay, so let's continue through and see what price does, and see if we get our next criteria. Okay, so in this scenario, we have our swing structure, our swing high that created the swing break, swing strong low. And like I just mentioned, this is all of our internal structure. We do have a current valid internal setup. Okay, what do we have here? We have a pullback, break of structure to the upside with a candle closure, right? This was a strong low that what? Broke structure to the downside. So what did that make this? A strong high that we've now swept and then broke structure to the downside. You guys see that? Let me just mark that out again. Break, pullback, break, break to the downside, new strong high, sweep of the strong high, new break. So what does that make this? So far, a valid setup, as we have our structure story in place, we have a strong high sweep, and that created the break of structure to the downside. So let's mark off the rest of our criteria. We take our fib from the low to the high. Okay, this entire candle actually acts as our supply zone. Let me mark it out with a GAN box to see the 50%. That acts as our entire supply zone. Did it create volume? Well, if we zoom into the leg, we can see that the supply zone did indeed create a fair value gap. Another word for that is volume or imbalance. So therefore, we have criteria 1, 2, 3, 4, 5, and 6 in place. This is a valid setup. Okay, our pullback is nice and corrective. Lots of wicks, lots of liquidity. So I'm liking this. So we can set our limit on the 50% of the supply zone. Why the 50%? Because the wicks of this candle of the supply zone is bigger than the body. So this makes this a valid equilibrium zone. Mitigation is only valid at the 50%. And besides, the entry of the order block is below the 71 fib. Your entry needs to be above the 71. Okay, all our criteria is in place. We execute our limit. No hesitation, no doubt. How do we know to execute this? Our rules are telling us to execute. Okay, more correction. We've tapped in. We swept liquidity into our limit. See what happens. Okay, strong reaction. And there's TP on that order block. Another 2% gain. That's basically phase 1 passed already on this challenge. Well, if you're simulating a challenge account here. Okay, so let's follow through. See what else we get. Okay, so here we have a sweep of a low here, right? But what did this low do? This low never broke structure to the upside. So this would not be a valid long setup. Why? Because this low is not a strong low. We only look for strong high or strong low sweeps. Currently, this is the most recent strong high. So we need to see a sweep and then a break of structure. Or this needs to break structure to the upside, create a new strong low, and then sweep that strong low and create a new break for a new setup. So let's have a look what happens. All right. So here's a sweep of that strong high, right? We wick past it. What do we have internally? Break, pullback, break, new break to the downside. This high was created after a strong high sweep. So here we can mark out our fib as we have our 2 first criteria in place. Okay, our structure's marked up. We have a strong high that was created after a liquidity sweep of a previous strong high that created a new break of structure to the downside in this scenario. Okay, our order block is this candle here that created the volume. Nice corrective pullback, strong high liquidity resting in the leg. So what can we expect is a sweep of this high into our limit. Okay, let's just mark out our supply zone. Okay, in this scenario, the body is bigger than the wick, so therefore we don't have to enter the 50%. We can enter on the tap in. 2 risk to reward. For me, 2% risk, as we are well over 100k up on our account. Okay, there's tap in, sweep of that liquidity. Nice strong reaction. Okay, and a bit of drawdown, and okay, nice bearish volume to TP on that order block. Okay, so another example of a TP on that trade. Let's keep following through. Okay, new break to the upside, new strong low. So we need to see a sweep and then a new break. Or a sweep of this strong high, because this strong high has already been swept, and the break to the downside for shorts. So let's see what happens. Okay, new break, new strong low, not created after any sweep, so nothing valid yet. New break, pullback, new break, current strong high, current weak low. So let's analyze what price has been doing so far. So now we can see we've just swept out a strong low. So if we break structure to the upside, we can look for longs if we have a nice demand with our volume. In terms of shorts, what did we say earlier? We swept a previous strong high, right? And now we broke structure to the downside. So we have a what? A new strong high that's been created after a previous strong high sweep that created the break to the downside. That's criteria 1, 2, and 3. All right, we have an order block right here. That did what? It created volume, a big fair value gap, and it's holding liquidity, specifically strong high liquidity. So what does this mean? We can now mark out our fib. Okay, I can clearly see that order block's above the 71. So we can place our limit. Stop at the high. 1 to 2, risk to reward. And by the way, there's no cherry picking here. This is my first time backtesting OrdCAD 2019. So I've never seen this market or never been on this market at this point in time. But we'll go through the overall results across all the pairs I've done so far with the exact same mechanical criteria towards the end of this video. Okay. Tap in. Nice sweep of that liquidity. Strong reaction off the order block for 2R. All right. I'm not worried about targeting these lows or getting the crazy R trades. I just want a high win rate with 2R trading, keeping it simple and keeping it really profitable. Okay. So that was another full TP. But what do we have now? We have a sweep of a strong low, a break of structure to the upside. Okay, let's mark out our fib from this range, as this strong low was now created after a sweep of a previous strong low. We have an order block with volume. So all of our 6 criteria is in place. Here's our, this wick zone is actually our order block. So let's place limits and see if we get our pullback. 2 risk to reward. All right, nice correction on the pullback so far. Okay, we've now swept a strong high. Okay, and for me, price is run without. We've created now more than 1, 2, 3 breaks of structures to the upside. I'm happy to call that an invalid setup, as that's now ran without me. So I'll remove this and rather wait for something new. Okay, let's keep following through. Okay, what do we have here? A strong low that broke structure to the upside. We swept that strong low, created a new break. So we can mark out our fib from the high to the low. And what do we have? An order block that has created volume. So if I mark out my order block, it would be this wick zone over here. So let's see if we get our pullback. Yep, that looks like a good pullback. We can set our limits. Stop always at the 1 to risk to reward. Okay, and there's an example of a loss. Beautiful. That's a part of our edge. Okay, so let's keep going through, see what else prints. So most recently, we have our strong high, weak low. Okay, strong high, break to the upside. Okay, pullback, new break. Okay, the reason why I didn't take any setup here, yes, there's an order block, but there's no volume in the leg. So what does that mean? A criteria is missing. Criteria 5 is missing. So therefore, invalid trade. As soon as a criteria is missing, there's no execution. And your rules decide when and when not to execute. Okay, so let's keep following through. Same thing here. We took out a strong high, swept it, new break. If I take my fib from the high to low, there's no order block with any volume above the fib. So that is also an invalid setup. All right, simple structure story. New break, strong high, pullback, new break, new strong high, weak low. What can we expect? Is a pullback to target those weak lows. There we go. Weak lows targeted, and we actually swept it. Okay, so if I look to the left, we've now swept a strong low. So if we can break structure, we can now look for a long setup. Okay, let's have a look if we get our candle closure. Yeah, there's the candle closure. So now we can mark out our fib from the low to the high. There's our pullback, entry, or in this case, there's not really an order block below the fib. So this is the only order block that I see, but even 50% mitigation is above the fib. So therefore, in this scenario, criteria 4 is missing because there's no order block below the 71 fib. Okay, so I'm happy to remove that as it is invalid as not all the criteria meet. We'll let this follow through. Okay, and there we can see we then broke structure to the downside. So the reason why this often fails and breaks to the downside again is because when there's no order block, there's nothing really strong for price to get a strong reaction off of. Yeah, we maybe got a bit of a reaction, but nothing significant for price to react off of, which is fine. Our criteria wasn't there, no execution. Okay, so just really free falling, still our current high and low. Okay, high and low. Okay, so from here, we either would need to see a sweep of the strong high, then the break to the downside for shorts, or a break to the upside, a new strong low, a sweep of that, and then a break to continue with longs. So let's see what prints and what happens. Okay, there's the sweep of that strong high. So now if we see a break to the downside, we can look for shorts. Okay, there's the candle closure. Let's wait for our pullback. Yeah, there's a significant pullback. So now let's mark out our fib from the high to the low. And we need to look for an order block above the 71 fib. Okay, so if I mark out the supply zone here, unfortunately, this is below the fib. So therefore, above the fib, I don't see any valid supply zone. So therefore, this is not a valid setup. Okay, so we'll continue this through. Okay, it's crucial that your supply zone is above the, or below the fib, and depending if it's a bullish or bearish scenario. Okay, so what do we have here? Well, here we had a low that broke structure to the upside, a sweep of that low, then a new break to the upside. So here we can potentially look for longs, but we would need to wait for our pullback. Okay, nothing significant yet. Here's a sweep of a strong low. So now if we get the break to the upside, we can look for longs. Okay, and just really free falling down. No trade plan yet. A very sharp pullback. Most likely we'll use this low as liquidity. Yeah. You can see this is extremely bearish price action. Okay, break, pullback, break, strong high, weak low. So we need to see a sweep either of that strong high or create a strong low and then sweep it. New break, pullback. Nothing yet. Let's just fast forward a bit, see what we get. New break. Okay, just following a beautiful supply chain, not sweeping anything with any of our valid criteria yet, which is fine. We let price play out. Okay, break to the upside. So now what have we done? Instead of now creating strong highs, we've shifted bullish, creating strong lows. That is breaking structure to the upside. Okay, new break, new strong low. Pull back. What do we have here? Strong high, swept to the upside. Okay, here we had then the break to the downside. But here in this leg, if I mark this out from the high to the low, okay, no supply zone above the fib. This whole candle was what? Was below the fib. So that's not a valid supply. We then swept again and created a new break. So this is now a valid continuation short. Let's see if we get our pullback. Nope, price is continuing it out. Yep, it's actually now fallen right through my screen, which is fine. We continue through. Our structure story. Okay, so here we have what? A sweep of a strong high. So if we can break to the downside, we can look for shorts. Okay, this low, did it sweep any previous strong low liquidity? Because yes, we swept this low, but this low was not a strong low, as this low never broke structure to the upside. So what have we done here? Well, we've swept a strong high. So now if we can break structure to the downside, we can look for shorts. But we've also broken structure to the upside. So we need to ask ourselves, was the strong low created after a previous strong low sweep? Well, I can see nothing on the 4-hour time frame. So in this scenario, I'm happy to check the higher time frame and see what we've swept. Well, here I can see that we've swept out really old external weekly strong lows. This was a strong low that broke structure to the upside. What was that? A strong low, and we then swept it. So this is a potential reversal on the higher time frame, and our 4-hour criteria has also printed. So this is one of those setups where if you want to include or incorporate higher time frame external sweeps, you can. I personally do. I don't mind them. I like reversals, especially if we have an order block with the fib. So here, let's continue through price. Okay, so let's have a look. Fib from the low to the high. And here I can see is our order block, but it is above our fib. So that is not a valid setup. Okay, so we'll remove this. Okay, there we go. Strong reaction anyway. So good example of a setup that's played out that just wasn't valid. And that's fine because it wasn't within our criteria. It wasn't a part of our long-term profitable edge and our equity curve. So we wait for a new setup. Okay, we'll continue through to the end of 2019. So that will then be a full year of backtesting. Okay, so nothing yet. We're still waiting for a sweep. We either need a sweep of the strong low, then the break, or a sweep of a strong high, then the break to the downside for shorts. Nothing yet. We're just ranging sideways in this range. Is that a sweep? No, that's just really equal highs. Let's just put my criteria aside here. And let's see what we get. There's a sweep. Okay, but that's not a strong high. We need to see the sweep of this high. Why? Because this is the high that broke structure. This high hasn't broken any structure. So it's not a valid high to look for a sweep. Okay, there's the sweep of our strong high. So now if we can break to the downside at this low, we can look for shorts. Okay, there's our break. Now we can mark out our fib from the low to the high. But what do we see? There's no supply zone. Well, there is actually up here a very, very secretive hidden one. That's actually a valid supply. So yeah, this is looking like a valid setup. It still has volume with strong high liquidity. All of our criteria is there. Let's see if we get our pullback. Okay, nothing yet. Just a break, pullback, new break following bearish structure. And continuing with art. That's fine. We can then remove the setup. It's continued way with art. Okay, so let's see what we've got here. Well, here I can see now we've swept out the strong low. Okay, here we had a pullback, new break. We've now had a break of structure to the upside. So here's a potential long setup. Okay, let's just wait for our pullback if we get it. So here we've now had, well, we have a current bullish setup. Why? Because this strong low that created the break here and here was created after a strong low sweep. We have our order block that created the big inefficient push with the volume, but potentially we also have a short setup. Why? Because we swept strong highs and we've broken structure to the downside. So same thing here. We need to mark out our fib from the high to the low. Okay, do we have a supply zone that's created volume? Well, if I look above the fib, this is a valid supply, but it's below the fib and there's nothing above it. Okay, this candle is not a supply. It's already been moved out, mitigated into, and ran from. So it's already a mitigated supply and is now invalid. So there's no valid shorts here. We'd have to wait for our longs to play out or a completely new short setup to print because we're missing our criteria. And that criteria is that there is no order block above the fib. Okay, so let's continue through. Okay. Yeah, new sweep of a strong high. So if we can break, we can then again look for shorts. There's our break. So need to wait now for our pullback. Okay, there's a valid pullback. Let's mark out the fib from the high to the low. Do we have an order block that created volume? Well, in this scenario, this is a valid wick zone that created an inefficient push. Okay, we have nice liquidity. So this is a valid setup. So I'm very happy to put my limits as all of our criteria meets. 2 risk to reward, 2% risk. Okay, see what we get. Tapped in, strong reaction, and tapped out a TP on that trade. It's a beautiful A+ setup, really nice. All the A+ criteria was there as well. Corrective pullback. We had strong high liquidity in the leg, created more liquidity in the leg. Nice fair value gap created from the order block. So this was a beautiful long setup with all the A+ criteria. In terms of our long setups, I think this long one has already tapped in the fib, but it hasn't tapped the order block, so that's still valid. Okay, so what do we have here? Strong low, break to the upside. This low wasn't created after any sweeps, so no valid longs here. Okay, and a new break to the upside. What is that? There we go. Okay, so continuing through, we either need to see a new sweep of a strong high or strong low, and then a break in the opposite direction. So we're currently 19th November, so we'll do this last month and see our results. Okay, awful range. Okay, so no sweep of a strong low yet. Okay, so there's the sweep. So now we need to see a break to the upside and then to potentially look for longs. Okay, nothing yet. All of this is just noise. Okay, new sweep. My criteria has just disappeared. I'm just going to put that back. Brush. I'm just going to copy this off my actual chart. There we go. Okay, so again, we had a new sweep, and this time we had a large break of structure to the upside. I know we didn't break swing structure, so this is a much more risky setup, but we did internally have a break of structure to the upside. So it's valid. We have a strong low that was created after a previous strong low sweep. That broke structure to the upside. We have a nice order block with volume. So we can mark out our fib from the high to the low. Yep, the order block, let me mark it out for you, is here. That created the fair value gap, which is here. So 100% valid setup. 1 to 2 risk to reward. Our standard 2% risk. Okay, nice pullback. Okay, there's our tap in. Strong reaction. And that trade was a TP as well. Okay, so let's clear this. Let's just see where we are. 10th of December. Okay, we basically have 2 or 3 weeks left before the end of the back test. So let's keep following through. Okay, there's a sweep of a high, but this high never broke structure to the downside. Okay, so I'm going to be happy to okay, continuing through. Okay, finally, we have a new range. Here we have a break to the upside. The strong low wasn't created after any sweep, so now we either need to see a new sweep and a break, or a break to the downside to look for shorts. Okay, there's our break, but did this sweep a strong high? Yes, this swept an old strong high, so this is valid for shorts if we get our pullback. Nope, price just free falling without us again off the screen. And this is currently Jan 2020. Okay, so we'll leave this here and we'll continue this for the next video. So let's see the results for 2019 so far. So this is actually the last 5 years on AutoCAD, but we'll do 1 year at a time for the video. So the video is not awfully long. But to give you an idea of the performance of AutoCAD in 2019 on this particular model, 85% win rate, total of 7 trades, 24% gain. So yes, I know in the period of a year, 7 trades doesn't seem like a lot, but remember with the higher time frame, you can look at 10, 20 pairs like I do. And I get a trade every 2 to 3 days anyway, just as many as you would on the lower time frame. And remember, when you're on 100K funding, okay, let's take a 100K example, and you're only taking, let's say, 5 trades. Let's take 6 trades in a month, 6 trades with a, what's that, a 65% win rate. We'll actually even give it a bit of slack. Let's say it's 65% win rate with 4 wins and 2 losses. And let's even use 1% risk instead of 2. So 1% risk would be a total of an 8% gain minus your 2 losses is a 6% net profit. That's still $6,000 on your 100K account. And you only took 6 trades in the period of 30 days. That's 1 trade almost a week. You don't need to be trading every single day when you have a proven edge. Okay, so if you guys want access to my Discord server, where I will be live trading start of January with this model, 100% free to join. My course is even free. My only paid aspect is my one-on-one mentorship, which is a mentorship where I work with you, whether it takes a month, 3 months, a year, 5 years. I backtest, I formulate your edge with you. We then tackle a challenge account together. And from there, we go all the way to payout phase together until you are consistent with this and able to make long-term profits and sustain your payouts on your Profirm accounts with this model and ready to go on your own. I call it the zero to payout mentorship. You will eventually get guaranteed results regardless of how long it takes. That's the only paid aspect I have in my community. The rest of my content, which is more than enough to get profitable with this, is completely free. And the reason why everything is free is because I used to be in the whole course selling game, selling mentorship. And honestly, I just made way more money actually trading. So I couldn't really be bothered trying to get people to sign up to my mentorship. In fact, I actually enjoy doing it a lot more for free because trading was just paying more. So I actually couldn't be bothered about the mentorship money. So yeah, that's why it's all completely free now. And with that being said, I'll leave a link down below in the description. There's a free course that will help you guys out with this as well. More backtesting videos, and I will also post more backtesting videos and videos like this on my channel of this simple model. Quick outlook on all of my results together so far. So I've only done 23 and 24. This is for 2023 so far. High time frame model 23. Really happy with it. Now I'm going all the way back from 2019 to 24, 5 years on every market. Gives me even a better understanding of the strategy and the results over the longer period. But yeah, there we go. 76% win rate in 2023, 226 trades. So if I go, what is that? 365 days in a year, divide by 226. 1.6 trades, or if I go 226 divide by 365 days in a year, 0.6. So that's basically a trade every second day. Anyway, across all of your pairs that you're looking at. So you're going to get just as many trades as the lower time frame. So you don't have to worry about higher time frame. I'm only going to get like 2 trades a month. You won't. You can look at more pairs. Here's an interesting statistic for you to end off the video. 80% of traders that got payouts with FTMO are swing traders on the higher time frame. The rest are lower time frame traders. The lower time frame is a lot of noise. If you're profitable with it, great. For me, it's just a lot of noise. There's issues that come in, such as spread, slippages, those quick moves on the lower time frame. Prop firms often manipulate you. Higher time frame, simple, clean, and profitable. Okay, take care, guys. Make sure to join my free live stream trading down below in the description, and I'll see you on the inside.